Good morning, traders. It's Friday, February 15th. Taking a look at the charts, we've got the SP 500 30-minute chart on the left-hand side, our green trending chart. When bars are green, we are in an uptrend. When we get these lime green areas, it's when the market dips into an intraday oversold territory. We have rallied up to this red hashtag that you can see up here. We've been kind of flirting with this overbought territory. Overall, the market continues to consolidate and wants to grind higher. If we look at the daily chart, you can see we've been grinding our way higher. We've got this upper resistance zone right across this area where I think the market, I think it might fall a little short of that. We got this 2800 area, but the market is poised here. It's had a rally, a consolidation to the 5-day. We could have the second half of that rally get us close to this 2800, at which point the market could run into some pretty big volatility and start to see maybe some type of topping formation, maybe a bit of a breakdown later. But overall, it's running and gunning for this 2800, this previous pivot high in the market. And you can see here this morning we're set more or less today for the session. We are set for the market to maybe have a little bit of a gap higher and a pullback in the morning, but overall this afternoon we are pointing to higher prices based on short-term intraday cycles. Looking over at the chart of bonds, bonds continue to consolidate. Obviously, money flowing into stocks this morning. They're up about 0.4%. Money's flowing out of bonds, out of the safe haven, and continuing to consolidate. The big picture here for bonds is we are trying, it looks like it's put in a bottom, it's consolidating, and I think it's just a matter of time before the stock market starts to sell off and we start to see bonds move back up and start to work itself to this upper end of its range. Taking a quick look over at our other plays here, NIO, it continues to hold up at this 20-day moving average. It gapped up yesterday, sold down a little bit. Overall, still continuing to be positive on the market. We've got green bars. We might see it continue to chop around and try and move higher here. It is in a consolidation phase. We'll see if it can get some traction going forward. If not, we may move on from this, but overall is still holding up in a key spot. And if the equities market does pop and rally, we could really see this move back up to the upper end of its range and break out. Looking at Roku, we're up about, it is trading higher in pre-market today again, more or less based on options activity. 52 was a pretty significant level that a lot of money was bet expecting 52 to get hit. Yesterday 52 was reached. We are a little bit overbought with you can see our little red hashtag here. The market has moved up to that level. Overall, we'll see how things go, but we're up about 18 or 19% on that play. We might close that out since options are saying that is now kind of the target it was gunning for. So we might pull off there and look for some fresh setups. Again, it has had a nice run. It's up, and we might just have to find something fresh. We're kind of hoping for an explosive pop, and you never know, it could come, but overall, options are saying this move was more or less reached already, and big money using high leverage behind the scenes are saying that 52 was the key level as of yesterday. Looking at UGAS, natural gas, this ETF, the only issue with these ETFs is simply they can lose value if natural gas doesn't move quickly. Natural gas was up yesterday, the ETF went down. This is just what happens. It's amazing how only 4 or 5 trading sessions you get this almost like theta time decay, just the way the contracts roll from forward months, from current month to more forward months. And we'll see natural gas up almost 1% this morning. We'll see if we can get a pop and a move up here. We probably should have just taken that 18-20% pop that we had 2 days after and moved on, or moved our stop to break even. But overall, we'll see if we get this pop in the market. We're hoping for a more significant pop, and it still very much so could come. I just hate to hold these ETFs. You really want a technical tag of the certain level, and you want to see it really bounce and take off. It's got to find some traction here in the next day or two, or trading session or two, or we might just move on because this ETF will just erode your value, even if you're somewhat right over time. Looking over at crude oil back up, testing this critical resistance area. Let's just move back on the chart here on the daily. You can see where we are in the grand scheme of things. A big downtrend. It's flirting, trying to break out, and overall we're going to see if it can make some type of move there. Overall, the dollar is trading up fairly strong this morning, and we are seeing commodities. We're seeing oil move up. We're actually seeing precious metals move up this morning and the dollar. So there's a lot of things kind of moving higher today, including stocks. Just one of those days it looks like most things are moving up. Money seems to be flowing into the market. So we'll see how the day plays out. Overall, nothing significant standing out on the charts as of this morning. So we'll just kind of go one day at a time here until we see something more significant. Here's the chart of gold. Formed a bit of a bull flag, came to the 20-day, starting to move up. We'll see if the US dollar can break out of this range. It's very close to a breakout run of 97.50. If it does, we're going to see the dollar really take off and extend to 100, which means we are going to see gold and miners most likely pull way back down below this 13 level and consolidate much deeper. It's just we're on the verge of the dollar breaking out, and it hasn't done so yet. So money is still creeping into gold and silver. Anyways, that's it for now. Talk to you in a bit. Bye-bye.